A lot of founders are probably coming in this like, we're going to sell the business in 3 months.
I'm burnt out, so I want to sell my business. And I think that's a horrible reason to sell your business. You have to really prepare for a long grind. I'll be honest with you. It's not as simple as selling a house. It certainly isn't. Not if you're going to do it in a way that's going to yield you a premium multiple.
I guess when it comes to their role in the entire process, how do you view that?
If we go through that process and it's because you're doing everything in the business, there's too much founder dependency here. Either you're not going to attract a buyer pool or you're going to get an offer that ultimately you're not going to want to take, right? It's not going to be the number you're looking for. And you'll have spent, 8 months going through this for what?
If I'm a founder, what's the one question you're going to ask me to start the sale process?
Why would somebody buy this business today?
Welcome to another episode of This is M&A. My next guest has lived the deal life from almost every angle as turnaround CEO, an operator and founder, and now an M&A advisor. He's a managing director at ACT Capital Advisors, an investment bank that's focused on middle market deals. While the firm is industry agnostic, his sweet spot is the aviation space. This isn't his first act. At just 29, he became CEO of a 20-plus location health club business in Latin America, led a turnaround, rolled up acquisitions, and exited to a PE firm, staying on as CEO. Later, he built and sold an Orange Theory franchise region and did the same. After a short break, he found his way back to M&A, this time in the advisory side, helping founders navigate the process. And when he's not closing deals, he's actually smoking briskets and playing Metallica riffs on his guitars. With that being said, welcome to the podcast, Juan.
Stephen, thank you for having me today.
This was in the making for quite some time. So happy to finally have you on the podcast.
Congratulations on getting the podcast going. I know it's been a huge focus of yours for a bit now.
Definitely. We're going to dive into the hard questions that founders and CEOs need to be ready for when they're preparing themselves for exit. Questions like, are you really ready to let go? Why should someone buy this business? Are you a passenger or a driver in your own exit? So with all that being said, I know you have a ton of experience in this space, just given your background being an operator, a CEO, a founder, exiting, the companies, rolling up companies, etc. Where should we get started on this?
I think the first question you mentioned, it's almost the most important, right? It's are they emotionally ready to go through the process? I mean, I will tell you that selling a company can take anywhere from 8 to 12 months. And it is an emotional roller coaster.
A lot of founders are probably coming in this like, we're going to sell the business in 3 months, right? So you're starting off the gate having to reset kind of expectations.
Yeah, look, you have to really prepare for a long grind. I'll be honest with you. It's not as simple as selling a house. It certainly isn't. Not if you're going to do it in a way that's going to yield you a premium multiple and bring in sophisticated buyers to the process. In order to get there, I like to start with the why they want to sell. And I want to understand why the owner or founder wants to go through the process. And normally, one thing that I hear a lot, for example, Stephen, is I'm burnt out, so I want to sell my business. And I think that's a horrible reason to sell your business. Because if they're burnt out, it could be for various reasons. One is, are they doing everything in the business so they don't have like the right systems and people in place? Well, that's a red flag for a buyer. Are they not, enamored with the ability to find growth areas and new markets and services and products? Are they lacking that entrepreneurial drive that took the business to that place in the first place? Or is there something going on at home, right? Is there a family issue? Is there a divorce? Are there things that really aren't the right reasons to sell, and honestly, that's something I hear a lot. I'm burnt out and I like to get to the bottom of why. Secondly, if they're not burnt out, it just has to be something that they're clear-eyed about the process and what it means, to go through it.
Well, let's talk about that first point about the burnt out, right? Have you had to turn away business because you're just like, hey, this guy really is checked out. This isn't the right company for me to go sell?
Yeah, look, I think as an M&A advisor, but also, as a former operator, like, I really want to understand, how bought in they are, and if they're going to be a partner in getting the deal done, right? If a founder is selling for the wrong reasons, what you'll find is that there'll be a lack of focus in structuring the process and getting the materials ready, and then going and finding the right buyers to live for the business. So typically, I can tell in those first conversations, and we do a pretty in depth discovery when we're talking to a potential business to take on as a client. And you can tell quickly if the motivations are right, if they're thinking about it clear eyed, and if they're really bought into going through it. Uh, and I have had situations like the burnt out question. I mean, I've run into that, and I basically said, look, that's not the right reason. Like, it doesn't sound like you're ready. Or if we go through that process and it's because you're doing everything in the business, there's too much founder dependency here, and you're just not gonna either you're not gonna attract a buyer pool, or you're gonna get an offer that ultimately you're not gonna want to take. Right? It's not gonna be the number you're looking for, and you'll have spent 8 months going through this for what? So
Right, right. Ends up busy work on both parts, right? On your end and on their end.
correct. So I like the founder to be mentally checked into it,
Right.
um, because it is a long haul.
When it comes to their role in the entire process, how do you view that? How do they, even now that they have a team that's going to be assembled to help them sell their business, how does their role play into this?
You mentioned, a passive owner and an engaged owner. I think you always want an engaged owner in the process. If we are a team, so and I really believe that to do an M&A transaction, you really need the right team of advisors. Like, it's not just an M&A advisor, and it's not just, the lawyer that negotiated your leases and your operating agreement, but a real M&A attorney that understands transactions, a real CPA firm that not only understands, corporate taxes, but also transaction taxation, um, a wealth advisor that is advising, working with the CPA firm and the attorney, and obviously the founder in terms of structure, what makes sense for them, in terms of this new liquidity event that they're about to have. I think the best is when if so we're for a team, what you want is the founder to be almost like the quarterback, to be engaged with all of us in all the details of the process, because there are a lot of decisions that only the founder can make in terms of the process. And that way, if there's that trust within that group of advisors and that founder, it just makes the transaction a lot easier. So we always advise that, like we like to get the founders to realize, look, we are the M&A advisor. We're going to create a process. We're going to help you, derive their materials. We're going to assist in the negotiation. We're going to identify the right buyers, but I want that law firm in place at least when the LOI is being negotiated, to protect you. Definitely that CPA team, so we can look at the assets and think about, what taxation means in terms of how the deal is structured. I like to have that team in place even before the LOI hits. And that founder, it only really works if that founder is very engaged with you, looking at those decisions, having, broad communication with that team, and just building, approaching the process professionally. Because on the buyer side, these are sophisticated buyers that look at, tens of deals a month, and they're coming prepared with a team, right? So you almost want to show up to the process with your own team, very professional and sophisticated, and it only really works if the founder's engaged.
From your experience, have you had founders that kind of disengaged? Maybe not right off the gate, right? Because in deal making, the founder could be engaged at the beginning and then slowly start to disengage, right? That's happened, I'm sure, with folks that you've worked with. But I guess, have you ever had a founder that either started off disengaged or started to disengage that you had to kind of like rope them back in?
In the M&A advisor experience, I've had a couple that disengaged early, and I've had, frank and honest but very respectful conversations about the importance of staying engaged and staying on it, right? Usually the way that I like to work is, obviously, we talked about getting to the why they want to sell, but the other question that you had there was, why would somebody want this business in the first place? So a strategy that I like to employ is I like to sit with the founder and do a real deep analysis of the business and put it through a buyer's lens. So if it was being if I was acquiring the business, and I want to look at the systems, I want to look at the financials, I want to look at the compliance issues in HR, I want to look at how many decisions that founder makes versus, his team, his or her team.
Wait,
Uh,
Juan. So really quickly, so you're saying EBITDA and revenue is not enough?
No, it's not. Even EBITDA and revenue gets, it's great to put that on a teaser and to get, as sophisticated buyers to come and look at it. But honestly, what you want to do is you want to show somebody that you have a transferable and attractive financial asset, not just a business. You want to inspire sophisticated buyers to pay a premium for your business. So you got to tell a story beyond revenue and EBITDA. You got to show that revenue EBITDA can be protected and grown, and that somebody can grab that as an asset and really scale it. If you're able to do that, that's when you get multiple buyers attracted to the business, and ultimately you can push up the valuation you get.
Well,
So
I'm sure that story kind of helps facilitate too. Who are you? What types of buyers are you going to go target, right? Based on their response to that question.
bingo.
Yeah.
Let's remember when we talked about the why. So let's say, scenario. I'll give you an example for myself. And the last deal, I didn't want to stay on as CEO. Like I wanted to fully exit the business. So I knew that my buyer pool was really like strategic buyers, multi-unit Orange Theory operators that would just roll our region into a bigger operation. They didn't need me, post-transaction, right? They needed our teams and our processes, but I didn't need to be running the company. That was like a personal decision. So it narrowed my buyer focus. And we worked with an investment bank, right? Like Piper Sandler did our deal. They were amazing. But with those guys, like giving them the clarity of what we wanted to do, they went and built, the buyer universe and the process around that. you know, if a founder is looking to do a transaction where they're going to become the platform for a private equity group, so they're looking for growth capital, they're going to sell the majority of their company, roll in a minority 20 to 30%, and stay on as CEO, then that's a different approach, right? Like then you're trying to convince a sophisticated group of buyers, mainly PE groups or family offices, that your business can be a platform for growth, both organically and through add-on acquisitions. So you almost have to go to market with that type of plan and that type of positioning so that that type of buyer gets interested in even bidding on the business.
I know through some of the discussions you and I have had, part of what you found when you were in that similar position is there was an emotional side to that, right? It was very emotional. There were some questions that you really needed to answer about where are you going afterwards? What's going to happen? What are you going to do next? Tell me about that a little bit, because I think our subscribers and viewers, that's an interesting, point. We're all, at some point we're like, hey, we want to sell our business, but I don't think we really know what that means for a lot of us, right? At the end, what's the afterlife look like, right? I don't think we're thinking along those lines when we make that decision necessarily.
When we started the Orange Theory region, and that business, we always knew we wanted to sell it within 5 to 6 years. Like that was the business plan and strategy. So I was mentally prepared to go through that process. And then, 2 years before we sold, we actually started the process. We talked to some buyers. We weren't ready. We had to, grow our systems, do an add-on. And COVID hit, obviously. Got through that, and then obviously exited. But I was mentally prepared for the M&A process. What I wasn't prepared for, and remember, this was like a sale where I went to a strategic, so they didn't need me the next day. The wire hits, next day comes, and the music just stopped. And it was weird, Steven. I mean, for years in my life, I was running around, getting on planes, running teams, finding new locations to build, working on the business, conference calls, the
Oh yeah,
hustle and the grind, right? Of running a
definitely.
company. And that stopped. All of a sudden my calendar is clear. We
For
don't have the
for for
cadence of meetings.
for a split minute, was that nice? Was it kind of like refreshing? It was like, All right, I got
You
nothing to
know,
do.
it was very anticlimactic, right? Like for me, it felt great. Like when you have this moment, when a transaction's closing, where all the attorneys get on the phone in a conference call and they basically exchange the documentations and the signatures and basically approve the wire. And then you're like watching your bank account, and then the wire hits and it's great, and you have a celebratory champagne. You go to sleep, and the next day when real life starts, you're like, what the heck? And
Right.
it hit me like a brick. I wasn't ready for that. It took a couple months to really get my bearings on what I was gonna do.
Yeah.
And let me put it in perspective. I only owned that business for 5 years, right?
Right. Right.
There are people who are gonna do this for the first time. They're gonna sell their business. They haven't gone through an M&A process, and they've owned their business 20 plus years, and this is all they know.
Right. Yeah.
And if
That's a whole different beast in itself.
Yeah. So in that first interaction, when I'm meeting somebody to go through this process, I like to tell that story because I want them to start thinking about that second act. Especially if they're not going to stay around, if they're not going to roll in and be the CEO of a PE group or a growth capital partner, then it's something that they really just need to vet with their families and their colleagues, and figure out whether they're going to sell this. Like, look, at least go take a vacation, but ultimately, what are you going to do next? And there's a lot of people that sell when they're not at retirement age, that they're maybe in their 40s and 50s, so they still have a lot of working life left. And I think a lot of people don't think about that. And obviously, I've had M&A experience and I've sold companies. I just never thought about the next day if you're not involved, and that was weird.
That's another emotional example, right? It's a very emotional experience to, oh, I built a business. The intent was always to hand it down to my kids. They don't want it. That's emotional in itself. And now I'm selling it, and I got to sell it to someone else that it's not going to be in the family, right? Have you been seeing the same uptick I've been seeing in that world? And how are those founders handling that?
It's the biggest thing. I think the biggest trend that we're going to see over the next 5 to 10 years, or even longer, because there's a lot of baby boomer businesses today, where they're approaching retirement, and they're all facing the same scenario, right? Their kids have moved on, they have their own careers and their own hobbies, so they're not really, the days of inheriting a business, like it used to be very common before, and now it's not that common. But there is a way, right? Like, so usually these are legacy focused founders. And again, I go back to the beginning of the engagement. I think a wealth advisor and an estate planner can help a lot with that, because just because you sold the asset, right? And a lot of founders have most of their net worth tied to the business. Well, they're going to have a liquidity event, and that wealth is going to be, extracted. There's a beauty at creating your estate plan, you
Right.
know, and you can address your children and your family through it. What happens when they go to college or when they get out of college? Can you help them with a house? Can you help them fund the business if they're going to do it? Those are great conversations, and that's why I think that wealth planner and that estate planner are key to have if you're a founder. As soon as you start thinking about going into an M&A process, you start like having that conversation, because if your challenge is that legacy of what you're going to do for your family, well, that's a great exercise to take the emotion out of selling the business, because you're now planning, what you're going to do with that wealth and how it's going to affect your family in the long term.
Right. I've spoken to a lot of wealth advisors, and several of them recently. So I'll likely get one on the podcast here pretty soon. I'll have to get some invitations going. But a lot of them will tell you should be thinking about it years before, right? Start planning years before. And what's nice is they'll help you get ready, right? They'll help you get ready from a very different lens than an M&A advisor. So I think having that solid team and having a wealth advisor in the mix is extremely important.
Absolutely.
Yeah.
Absolutely.
The founder, the one who isn't really ready to let go. They got you at the table. They thought they were ready to exit their business. Through your discovery and the questions you asked, you start to realize this guy might not be ready to let go. What happens in that scenario?
Well, I think, it's not necessarily you don't do the engagement, right? Like, I think what you got to say there is, well, you can always stay on as, CEO and leader, but are you going to be comfortable reporting to a board, right? Because then normally, that's what will happen. A private equity group is going to invest in it, give you the growth capital. They're going to now become the majority owner in most cases, not always, but and then there's going to be a professional board. Are you excited about that? What does it mean? If they don't want to let go of the business? And then the conversation then becomes is, are you ready for that phase of professionalizing the company? Some people will say, look, I haven't really reported to anybody in my whole life. How do I do this? I still want to do it for the growth capital. Oh, those are negotiations. You can always say, well, look, you work out with the buyer that you sit down and you're CEO for a year, but eventually, you sit back, you get a board seat, and you co-hire a CEO with them. There's various ways to skin that cat, but again, it's really finding that motivation of what they want to do, what it means to do the transaction, and then identifying the right buyer and having the right conversations and negotiations to make the deal work.
Right. Right. Makes sense. So, let's talk about a buyer who walks away even from a profitable business. I'm sure you've ran into that, right? So we were talking about it's not just EBITDA, it's not just revenue, it's all of those other factors, right, that start to come into play. What's that look like through your lens?
It happens more than you think, right? Like have a profitable business, good EBITDA, good customers, but maybe you're just not a fit for the thesis, right, of that buying group. Like somebody, depending on who the buyer is, they might want to buy that company and, really grow it via acquisitions or organic growth. There is a premium today in the private equity world and in family offices where there's a premium on operations. Interest rates have changed. There's a lot less, financial engineering in terms of doing these deals and doing a lot of leverage buyouts. That is kind of going through the wayside. And there's a lot of focus today by PE groups on operating cross-functional teams that come in to try to find areas where the business can improve operationally. And if those teams don't identify those issues well during diligence, then they'll walk from the deal, right? Because you're going to have longer hold periods, and you have to actually build the businesses. They're not just playing with equity and debt to get an IRR return. Again, it goes back to preparation. If you're a seller and you're entertaining a set of buyers through an M&A process, those are the conversations and questions you need to be asking the buyers. Like, how do you look at this business? Do you use an operating partner to improve operations, or do you use a cross-functional team? I like, you want that cross-functional team to get involved early as you're doing diligence, because as a founder, you want to start having that conversation of areas that you can improve, because once the deal happens, the integration starts. And a lot of the failure in M&A and a lot of the reason that sophisticated buyers don't always pull the trigger is because they can't identify how well they'll do an integration plan. And that's the biggest risk in M&A. Somebody buys a business and they can't realize the synergies or create the growth plan. So we talked about the seller, the founder being a quarterback. This is where I want them to quarterback, right? Like you got buyers at the table. Let's say you have 3 different offers, it's 3 different buyers. Well, you want to understand their philosophy of how they're going to manage the business. And you almost want to be a player with them in terms of working on that business plan. I think that builds the right rapport. And easily, if let's say you're talking to three to 5 people, you'll quickly realize as a founder who the right buyer is, like who you're having good positive conversations with, who you can feel that you can assign your C-level team to work on the post transaction deal. And those interactions become less about answering buyer questions, and they're more two-way street. Guess what, you do that well, you're emphasizing your leadership, you're finding the right capital partner or right buyer, and you're presenting your company as a real good transferable financial asset. That's kind of the secret sauce where you start getting a legitimate offer and finding the right person to sell to.
Yeah, no, makes a lot of sense. It's not always the biggest check that wins the deal either, right? There's a lot of other things that play into it that you hit on, right? The C-suite, where are they going to go? What's their role in the go forward plan? These founders care about their employees, and they should, right? Companies are built with people, right? And that's typically the most important asset. And you hit on a point that I actually spoke to a post merger integration person recently about. Post merger integrations are hard. Part of it is getting the deal done, but what's what happens after the deal. We've seen some historical deals that fell completely apart because the seller and buyer weren't aligned, right? They weren't aligned from a culture perspective. They weren't aligned from a management perspective, and post merger is where deals tend to fall apart. So
It's the biggest risk. Buyers, if they don't understand that process and then they're going through the diligence, somebody signed an LOI, let's say, and you've gone exclusive into diligence, and they start retrading the deal because they're starting to find things where they feel there's a lot of risk post merger or post acquisition. If a buyer doesn't understand that, they get very emotional as the reasons why. But I think if you start having those conversations about what the plan looks like post acquisition, early, like even like when you're negotiating the LOI, and you start meeting kind of their ops people and ask for it. Like I would say, tell a private equity group or tell a sophisticated buyer, I want to know, if we sell this business to you, if I'm going to continue to be the CEO and, I'm going to roll equity into this, like I want to work with you. And it's like, how do we get this plan aligned so that, the wire hits and the next day we start our 100-day sprint to make this work. I think that removes emotion from the process, that aligns interest, and it just makes it like a more frictionless way of executing the transaction.
if I'm a founder, what's the one question you're going to ask me to start the sale process? Just to kind of give our founders a sense of, hey, this is the one question you should be prepared to answer right out the gate.
Why would somebody buy this business today?
That's sound advice. I've heard that from M&A attorneys, investment bankers, M&A advisors. That's an important one for sure. Obviously, the emotions that go behind getting yourself ready for exit. We talked about how important it is to be a founder who's going to be a quarterback, not be sitting on the sidelines, but instead be quarterbacking everything. Yes, there's a great team that you've assembled, and the importance of having that great team, but that doesn't mean that the founder gets to kind of sit back and let that team just go run plays. They got to quarterback it, right? That was the other component of it. And then obviously just asking the right questions to really make sure that a founder is ready to sell their business. But taking all of that now and kind of pivoting to you and your experience, you know, if you could reflect back in your childhood, um, what would you say kind of built you up to where you're at today, right? And what we're talking about, right? Like whether it's being a founder, being a CEO, or being an M&A advisor, is there an early childhood history to that kind of you're like, now that you're asking the question, I believe there was. It was this point in time.
Yeah, so my father was an executive, right? And he worked for some family offices when he was in the height of his career, and he did well for himself, right? He came out of nothing and did well for himself. And always kind of pushed the idea of hard work and of creating kind of a future. So when I came out of school, out of college, I I studied engineering but never went into it. I actually went right into finance, because I liked, money and deals and project management, and I was very driven. And I initially started with a real estate development group, doing Publix anchored shopping centers. Publix is a local chain of grocery stores,
Yep.
and I loved
I visited a ton of them in Florida, so
yeah.
I'm very familiar.
They're massive now. They're like, I think, all over the Southeast, but, I loved that job out of school because it had everything, right? It had finance, it had project management, it had negotiation, it had construction, it had, like, all this creative stuff, and I thought that I was gonna be a real estate developer. But then the '07 recession hit, and I got recruited by a family office. to join their team, right? And they did real estate development as well, but also invested in a bunch of companies and did a bunch of M&A work. And I'm sitting here and I'm saying, man, my father worked for like a very wealthy gentleman as well and did like a lot of his financing, and I'm kind of here now. So when I had the opportunity, I wasn't gonna let it go, man. Like I hit walls, obviously, made mistakes, but honestly, that team was the team that gave me the opportunity at 29 to run a business, and they basically said, "Look, here's a company that we are buying out of Chapter 11, and you can step in and run it." And I did, and I knew nothing about health clubs. I knew nothing about the island of Puerto Rico, but I really jumped in and thought, this is the opportunity. Like, this is where I can like really create a career and make it. So it goes back to that father story. The other angle that I will say is now, going back to childhood, and now in this second act of M&A, well, I'll do any engagement. I've been really focused on aviation. And the reason is when I was a kid, we used to get on airplanes all the time. And I loved flying, right? This was a time with no like laptops or like devices. So the flying experience was very different. And I remember I used to tell my parents, like, when you book the flight, make sure you book by the wing because I want to look at the engine, right? Now, I like looking at the engine out of the window, and I would watch the whole flight and landing, takeoff, and everything. And now in the second act, when I started this M&A advisory work, because I'm in Miami, I started like meeting people in the aviation services space, and I walked through a turbine shop and it blew my mind. And I said, you know what? Like I'm gonna start this chapter of my life in on planes and aviation, because going back to a kid, I love that, right? And I never became a pilot, obviously, because of vision, but that was those were two things that I think kind of drove where I am today.
There's a lot to unpack there. I'm gonna ask some questions on all of this, but I think it made sense that you went the aviation and the services side, because let's face it, I think the time that you started going down the path of M&A advisory, it was during the pandemic, and a lot of the gyms and clubs weren't doing so well. That market was kind of hit pretty hard,
And then we saw the highest inflation, right? Like post
right?
pandemic that the US has seen, right? So
They
a lot
start
of my experience had been in customer facing, consumer facing businesses, but and franchising. And at the time it was like, well, what can you really do in a high inflationary environment for a type of service or concept that families are gonna, cut out of their budget right now. And I did in that period of time before I picked up advisory, I probably looked at 10 different franchises to invest in. And I just wasn't finding the right one. And I wasn't finding like the right opportunity. So when we got into the M&A thing, M&A was also challenged. But in this aviation services thing, listen, doesn't matter if there's a recession or inflation, don't fly unless they get serviced and overhauled, and that is government mandated. A lot of the players are exactly what we said. They're founders who have owned those shops for 20, 30 years. Their kids want nothing to do with it, right? So I can relate. And like I said, I'll do any industry in terms of advisory, but that's currently, doing some interesting engagements there that hopefully yield even more.
Well, you're fortunate in your background for two reasons. One, again, you latched onto the right spot. A family office, high net worth folks, they're high net worth for a reason. They know how to do things, and putting yourself in front of that and being able to get that hands-on real experience from an operator level firsthand is, I mean, critical. And I think you hit the nail on the head. It's okay to make mistakes. In fact, you learn a lot from these mistakes. It's just fail fast, that whole fail fast mentality. Like, fail fast, and if you're going to fail, you better learn, right? If you're not learning, that's a problem. But you had some good mentors in your life, and one of them I just want to kind of circle back to. Let's go back to your dad. You talked about your dad and his role that he played. Did did you ever have an opportunity to say thank you to your dad?
Yeah, my dad passed when I went away to college, right? But I'm very grateful all the time, and I think, I have siblings that were close and I've been able to share the experience with. But yeah, I'm very grateful. No question. And then through life, right? Like aside from my father, I've had great mentors that gave me opportunities and like pushed me. to do things right, and succeed. And I think to this day, there's a lot of people through my journey that have become life friends, that I've done deals with or worked with on transactions that, like with today, we are life friends. And I think that's what it's about. You go through this journey, you're gonna, have career changes, or deals are not always gonna pan out, or you're not always gonna make the right decisions. But if you kind of go through it and just build the relationships, it all kind of works out.
It does. It does. It's extremely important. The relationships are where they're at for sure. I know you and I have, had this has been in the works, as I mentioned, for quite some time. We've had some really good dialogue, really good conversations. That's why I invited you into the podcast, because you have a lot to offer to the audience, and I look forward to inviting you back. I think we can unpack a lot more here. We barely got to scratch the surface, which is the typical 45 minutes just isn't enough to hit on some of these critical points that we could be covering.
Yeah, no, listen, I'm very inspired by what you are doing with the podcast and obviously with ShareVault. And I think that, a lot of us in M&A have to do more of this. Traditionally, this has been like a very esoteric thing where, you have like very sophisticated buyers, family offices, private equity groups, investment banks. But I think the more that we do to educate sellers, and Main Street owners of businesses on how the process works, I think it just gets better for everybody.
100%. Yeah.
So I appreciate you creating this platform and engaging with thought leaders, and I'm very grateful you had me today.
Likewise. I mean, that's the goal. We want to help CEOs, corp dev, founders, entrepreneurs. If we can help them just avoid one or two landmines, then this podcast is doing its job. Or if we can just help them accelerate their business in any way, that's definitely the objective. Well, this was great. Tell us really quickly, Juan, how do people get in touch with you?
Listen, the easiest way is follow me on LinkedIn. It's Juan Ortega 27. So you can find me on LinkedIn. I post some content there, some stories, but there's also a way to book a call if you want to do an exploratory call about, your options, your business, how you should be thinking about it. You can book through LinkedIn. And the other thing is, I will be releasing fairly soon, probably about the time that this podcast comes out, a newsletter called Night Eagle Strategies. So that'll be nighteaglestrategies.com. And the newsletter, listen, it's going to be war stories and, no fluff, no Wall Street jargon, just, founder to founder, war stories, right? On business optimization, on creating value, on hiring the right employees and systems, and how to think about M&A as a growth engine, not just a sales engine.
Well, sounds right up my alley. Count me in terms of a subscriber for sure.
Thank you, Steven.
I'm sure our listeners are going to love this conversation. Thank you so much for being on the show, Juan. There's so much we didn't unpack. So like I said, I'm serious about having you back on the show. We'll do a second episode so we can dive a little deeper. With all that being said, that's a wrap on another episode of This is M&A. I look forward to seeing you on the next episode. Until then, stay sharp and stay deal ready.
If this episode sharpened your thinking, share it, post your take, follow the show, or drop a quick review and bring it into your next deal. We'll be back with more real talk from people who've been in the room when it counted. The views and opinions expressed on This is M&A are those of the guests and hosts and do not necessarily reflect the views of any company or organization mentioned. This podcast is for informational purposes only and should not be considered legal, financial, or investment advice. Always consult a qualified professional before making business decisions.